Well, at GE, we are one of the non-bank lenders, so we're very active currently in the market. We're a balance sheet lender, and we've got a large balance sheet. We're doing transactions from 20 million up to, well, there's no upper limit, but we've recently closed a transaction that's over $1 billion. So we do sizable transactions. So I think we're a good example of an organization that's very active in the non-bank market. Other active players will be some of the debt funds, although I think some of the debt funds are finding it very difficult to place their capital, having raised it. They're finding it a little bit trickier to find the deals. And then the other part is the insurance market. The insurance market has a very specific place. They tend to go for the longer term funding, so that's attractive for a number of borrowers who are looking for 7 and 10-year funding, where typically the banks are not so active and they tend to go for the 5-year, 3-year loans. But certainly I think going forward, when we look at this, the non-banks still account for a very small part of the market. It has increased, but it's a question really of how long they'll be there in the future. So here at GE, we will be in this market for a long time going forwards, and that's where we see it's totally our future in debt. But I think it's questionable as to how many other players will remain in that market, predominantly because the returns that they're sometimes looking for the investors are getting tighter along with the pricing, and so I think there will be a diminishing amount of non-bank lenders as we go forward, and the UK clearers and other main European clearers become a little bit more active in the market, which we're starting to see signs of. But overall, I think it's a good thing. We've got increased liquidity, we've got increased diversity across the market with the non-bank lenders, and I'm pleased that we can contribute and play a big part in that at GE Capital.